Hello and welcome everyone to today's Dynamics 365 Tech Talk. Today's topic is planning and configuring your chart of accounts. This is part 5, patterns and anti-patterns. My name is Erin and I'll be your moderator today. We are broadcasting this session through Teams live events and the audio can be heard through your device speakers. This session is being recorded on behalf of the Microsoft Corporation. When you join this event, your name, email address, and/or phone number may be viewable by other session participants in the attendee list. By joining, you are agreeing to this experience. The recording will be available on the Tech Talks Community Dynamics page within approximately 5 business days. If you have questions for the presenters or need support, please use the Q&A panel located on the right side of your screen. Our presenters will be responding to your questions during and at the end of the presentation. Thank you for your patience during these announcements. Presenting for us today from Microsoft, we have Rachel Profit, Senior Program Manager, and Eric Pegers, Senior Program Manager. Rachel, over to you to kick us off today.
Thanks, Erin, and thank you everyone for joining. Good morning, good afternoon, good evening, wherever you might be joining from. I am super excited for part 5. This is the last part in our series where we're going to be really talking about planning and configuring the chart of accounts. And we're going to be focusing in on patterns and anti-patterns. Eric and I have pulled together a whole slew of stories to tell you. So again, for those of you who don't know me, my name is Rachel Profit. My contact information is here on the screen. I do invite you to follow me on Twitter, connect with me on LinkedIn, check out my new YouTube channel, Dynamics 365 Unboxed, or my blog at dynamics365lady.com. Also joining me today is Eric. Eric, you want to do a quick introduction?
Thank you, Rachel. My name is Eric Pegers, and I'm a senior fast track solution architect like Rachel, and my contact info is on the screen.
Great. So our objectives today are really to take a look at all the different patterns and anti-patterns that we have for all the different topics that we've talked about throughout the series, including main accounts, financial dimension configuration, account structures and advanced rules, your legal entities, and organizational structure as well. We have done this for a variety of scenarios. And if you've ever been to one of our solution architect boot camps, then the format that we're using today should be familiar to you. And we've thrown in a variety of our air quote finance jokes to try to keep it a little bit interesting, because we know this is maybe not the most interesting content. So starting out with main accounts and financial dimensions. Eric, do you want to tell the first story today?
Sure.
Great.
Contoso Appliances sells a variety of services in addition to appliances and parts. In total, Contoso Appliances currently sells around 50,000 appliances and parts and parts for the appliances. That's 50,000 items. Additionally, about 70 services are offered which need to be tracked in detail in the general ledger. The physical items are not tracked at a detail level in the general ledger, only the service items. The item detail will be tracked using a financial dimension for the item. So there's 50,000 items and we need a financial dimension to track 70. Rachel, can you do better than that?
Well, I think, Eric, we should probably look to use a custom dimension. I don't think we should try to map all 50,000 of these values. It just doesn't make sense, especially not for just 70 of these items. So my thought is that we would define a custom dimension that has the 70 service items that need to be tracked in detail, and we select that custom dimension value on those 70 service items on the financial dimension fast tab on those released products so that they're linked to their financial dimension value. And it's not going to be automated, but I think in this case, right, with these 70 service items, it's a small subset. It's a one-time data setup, and the likelihood that you're adding lots and lots of new services is probably pretty slim. Some things that I would say we shouldn't do are probably like using the entity-backed financial dimension. And I know we talked about this in one of our earlier sessions where we said don't use it for larger volatile data sets. The 50,000, well, a dimension with 50,000 values is probably okay. A lot of it, remember, when we talked about it, comes back to the number of combinations. And the other thing that we don't want to do is use a single dimension that has multiple purposes or multiple meanings, where some of the values mean one thing and some of the values mean another. This isn't exactly like that scenario, but I think it's important to keep that in mind.
Yeah,
I
think that it is right. The using it for multiple purposes when 49,930 of them would be no purpose is the real red flag here, right? We don't want to create 50,000 values that we're not going to use. It. The requirements specifically say we're not going to track the physical items in the GL, which totally makes sense. If we want to track items, we would track them in the subledger.
Yeah. Did you do that math in your head, Eric? That was pretty impressive.
Yeah, it is morning here, so.
Math. Love it. Well, why don't we go ahead and move on to our next one? We will kind of pause at the end of each one of our scenarios. If you do have questions or comments or want clarifications on our scenario, our pattern, anti-pattern, please do feel to put those into the Q&A panel. We will address them as we go through. We will have time at the end as well. So why don't we take a look at the next story? So a customer has a requirement to automatically select a department and a cost center value when a specific main account and project dimension combination is used. The customer has set up the department and cost center dimensions they're backed by the operating units. So they're not custom dimensions, but the project dimension is a custom dimension. What do you think we should do, Eric?
Well, I would say that using some derived financial dimensions would be a good option. Another option would be to do some sort of an extension to that if the required dimension is legal entity specific, which in a normal case, a project dimension might be legal entity specific. And if you're going to do legal entity specific things, then you can't use a derived dimension. And the guidance for the extension would be to target the general journal or whatever specific form you need this behavior on. Such as Ledger Journal Trans Daily is the general journal form or whatever form it might be. You might also do it at the table level where it would, for Ledger Journal Trans, where it would catch all of the journals if you need to do it for legal entity specific.
So I guess, legal entity specific would be like, in this example, the scenario, right, we're doing a project dimension and it's a custom dimension. But if I was using the project module and I wanted to do an entity-backed dimension for the project, that would be legal entity specific. So I think you're saying that I couldn't use a derived financial dimension in that situation. Is that right?
Right. That's where you would probably, where using a customization to the forms that you want this behavior on would make sense.
Okay. I see. That's a lot of techie talk there, Eric.
Well, yeah. Hopefully you can, you can use the derived dimension for scenarios like this, but only if it's not legal entity specific. And the anti-pattern here is to change the dimension entry control, which would be on all forms, because that is it's a global sort of change, and it's probably will have unintended consequences of where you won't want it to do that, have that behavior all the time, and then you might try to do something funny to get it to quote unquote work only in the scenarios you want. So that's why we recommend getting to the form level or the journal level.
I feel like it would be really basically impossible to test this.
It would be very hard to test the dimension entry control, because it would basically be every dimension control in the whole system. And I think that's
so basically every single page where dimensions show up.
Yeah, and they're
That's a lot.
obviously all over. Yeah, master records and journals and everything. So, and sales orders and everything. So that's probably too much.
So someone asked, where can we get lists of legal and non-legal entity specific dimensions? I don't think there's a public list. I think you have to just look at the data source of that particular entity. We can certainly maybe try to take that as a feedback item and try to maybe get a docs article that outlines that for the standard legal entity or the standard dimensions that you can pick from. But obviously too, like you can extend that and pick any entity. By and large, like most data is legal entity specific when you're pointing.
There's a few simple rules, right, that will get you probably into the 90th percentile, maybe not much more than 80-20 rule. First of all custom dimensions are not company specific, and any entity-backed dimension will be company specific if the table that it's based on is company specific. So we all know that customers are company specific and customer groups are and item groups, and most of the org hierarchy, right, is not, I believe.
Yeah. So the org hierarchy, the operating units are global. So business centers, cost centers, departments, etc. are all global. Retail channels are an exception to that rule because the retail channel is linked to a company, but otherwise all the operating units are. Now we had another question coming. Can you have a default financial dimension based on what warehouse is being used? There's nothing out of the box, and this is actually a pretty common one that I've heard that people want to do this. I think there may be an ideas out on the ideas site that you can go upvote if you like this idea. I think the only approach here is to do an extension, and obviously there's a couple different approaches that you could use. If the warehouse itself if you don't want the warehouse itself to be the dimension, you'd have to like add the dimension entry control to the warehouse's form. And then you would have to like update all the initialize and the defaulting logic in all the different areas where you want it to default. And like that again gets complicated. So adding the dimension entry control to the warehouse form is pretty simple, but then you'd have to define all the transactions and places where you want to initialize and get that dimension. We do have the capability for a dimension to be at the site level, but out of the box, there's not one for warehouse. So I think you'd want to put really clear parameters on that if you were going to try to implement that in terms of where exactly you want that to default. But if you're using all of supply chain management, that could be a lot of different places: purchase orders, sales orders, production orders, projects. Like there's a lot of different places, all the different types of inventory journals, like a lot of places that warehouse is used that you could potentially want it to default in from.
This might just be can you have a dimension? a default dimension, not have it default potentially. So in which case it's a relatively simple extension to make a warehouse into a dimension.
Yeah, and it's just when you want to start defaulting, that's where it can get really complicated really fast.
Yeah, and that might cross into what we would consider subledger data, that you should use the normal data, the inventory data for warehouses instead of adding a dimension.
That's a good point. Yep, absolutely. So we've got our first finance joke. It's about you, Eric.
Yeah,
when I think of you, Eric, I imagine that you're Kermit. Developers, they think more typing is always the answer.
And that's not. I was a developer on the finance and operations team before moving to the fast track team, so this is not that far off.
And you used a typewriter to do all your coding?
Well, we like to think that it's, you just have to, it's what you type, not how much, but there is a volume to it. So
all right, you want to tell the next story?
Yes. Contoso Appliances has 3 financial dimensions: business unit, department, and cost center. The values for the cost center dimension contain a set of values that are 3 digits and represent cost centers. The list of values for the cost center dimension also contains a set of values that are 4 digits and represent marketing purposes. So this, I think it's pretty obvious, but why don't you see if everybody's paying attention?
Well, we kind of gave this one away on our first story. So each dimension should define one attribute. So I think in this example, really, we should be using 2 different dimensions. Right, so that goal there is that each financial dimension for each different attribute that needs to be tracked should be its own dimension. If we need to kind of report or group things, then that's where we can use the group dimensions to combine the financial dimension values together for consolidation or reporting purposes. Because I've seen sometimes where people will, use these extra values in there to kind of represent a roll-up, but you can create a roll-up using a group dimension. And those group dimensions, if you recall correctly, if you paid attention in part 2, you can't actually post a transaction to a group dimension. It's kind of like a total account for a main account. You can also use your row and column definitions in Financial Reporter to help you meet those complex reporting requirements. So instead of trying to make your data weird, make your data make sense. And I think you'll actually find that your reporting requirements are easier to meet when you have that. You can also use that. Go ahead.
Yeah, I mean, what'll end up happening is you'll either decide that, I need a value that is one of the cost centers and one of the marketing purposes, and pretty soon, you've got then you need 2 cost centers, and it just pretty soon they're 28 digits long, and you can't do any sort of analytics with them because they're too overloaded.
I really like typing that way, Eric.
So it just makes a lot more sense to, for the slicing and dicing that people like to do to keep them independent.
Yeah, I mean, and if you make them 2 separate dimensions as well, right, you can use that org hierarchy to define the relationship between the 2 different dimensions. Now, if you had crammed them into one, maybe you don't need that, but you get a lot more flexibility if you use that org hierarchy, to help define that. You can also use the same formatting across all of the values within the same dimension. This can be really helpful too, so you don't get like those typos. I mean, I've got some pretty mad 10 key skills, but when you're going at it pretty fast, like it can be easy to press the wrong number there.
Yeah,
and then go ahead.
Yeah, I think that the I forgot what I was going to say. Sorry.
Well, I can keep talking, and then if
Yeah,
you
go
think
ahead.
of your thing
No,
again,
go ahead. I'll
you
think of it.
you can dive right back in. So the last one is kind of like talking about those derived dimensions to build that intelligent defaulting based on another dimension value. So we talked about those derived dimensions on our last scenario, but it gives you another opportunity that you can be a little bit smarter and build intelligence in there. And when
I thought of my thing, and it seems like that the marketing purposes will probably only apply to some of the main accounts potentially. So it's probably a good opportunity to use an advanced rule and to, sort of simplify things a bit, or carve out that conditional part.
Yeah, I think you're definitely right, especially in that segmented entry control. When you use those advanced rules, it becomes so much more simple and easy to configure. Now, some things you shouldn't do is use a single financial dimension for multiple purposes. And the other one is using an entity-backed financial dimension when a small portion of the source data is needed. So that's coming back to the first scenario. Like if I don't need all of the items, right? We don't need to make an entity-backed dimension to represent just a small subset of that data.
Right. And we can ask that frog to, if it's important, we can ask the frog to do a customization to create the custom dimension when the source is created for the edge cases, but doing them all is a,
I think you're going to want to talk to your consultant first about that, though.
And we, first of all, there have been some very nice comments and great comments so far, and I think it's safe to say that the pictures are more or less interchangeable, and depending on who you are, you may rearrange them differently. So
consultants, they always think more typing is the answer. Good stuff. Good stuff. I've got another story for you. Are you ready for this one, Eric?
I am.
All right. Contoso Appliances is migrating their financial system to Dynamics 365 Finance. The team is happy with the current chart of accounts, which has more than 10,000 main accounts. When analyzing the accounts, it was noticed that there are many main accounts set up for tracking revenue, COGS, and expenses related to the product line, brand, and department. Financial dimensions are currently planned for business units and cost centers. So, Eric, what do you think we should do?
Well, I think we should not have 10,000 main accounts.
But I want 10,000 main accounts. That's what I have today. I don't want to change it.
Well, this is actually similar to the previous one in some ways, right? We don't want to overload the main accounts any more than we want to overload the financial dimensions. So using dimensions instead of repeating main accounts is the pattern here, and separating them with a specific financial dimension. And in this case, we can see that even if we add 3 more dimensions, we're still going to be at 5, which is below Rachel's magic number for the too many dimensions. So we're
6. I think I said 6.
Yeah, I think 6. It's on. I believe it's on your Unboxed YouTube channel where you have that. Yeah.
Yeah.
But and you should use the deployment of Finance, Dynamics 365 Finance, as an opportunity to clean up and make improvements to this chart of accounts design. I believe
so
it was.
Are you implying that we should have like a change management process in our implementation?
Absolutely, and not only that, it was in part 1 or maybe 2 where we said you should have a design and a documentation for your chart of accounts design, and you should update it every year. And this is one area where you will simplify things for users. It'll be some learning, some change management, but once it's done, it'll be easier because these things are not overloaded and they're more straightforward. The anti-patterns is keeping legacy things just for the sake of avoiding change. And there would be some mapping work for balances and stuff, but that's that learning and that mapping is one time, and you get the benefit of a cleaner design forever. And yeah, and the same sort of thing with, you know, in having longer main accounts or having some sort of encoding in them to have them give a double meaning is it's just going to be harder everywhere. Whenever you're doing filtering and stuff, you have to remember these tricks, and the system is set up to allow good, you know, good filtering and stuff at the for dimension values and main accounts.
But I really like my ciphers. I've got one of those little wheels, right, where you have to like turn it, and
yeah,
that's how I know what my dimensions mean. That's not good.
That's only good for you.
Oh. Accountants, they think more typing is always the answer.
Yeah,
like the cat.
I think the cat is probably a good accountant. They're kind of quiet and keep to themselves for the most part, but
you apparently haven't met my cats.
But I've met a lot of accountants. I'm not an accountant, so I don't, but
all right,
many friends. So anyway,
we digress. You want to tell the next story?
Please. Contoso Appliances is using the project modules to track internal and external projects. The chart of accounts has a total of 18 financial dimensions. 5 of these dimensions are used for all project-related transactions, including details such as the types of hours, types of expenses, billable status of transactions, and which project and project group the transaction relates to. So it took every ounce of control I had to not stop after 18 financial dimensions, but
like
I'm sure there's a pattern here somewhere. Yeah, we'll cover that separately.
Just laugh out loud. Yeah. I'm gonna go with, like, you know, if I had a wrong button, I would totally push it right now, but I only have a that was easy button, so it doesn't really apply here. So in this situation, Eric, I really, it sounds like we probably really ought to implement the projects module. But I know you said that the projects module was out of scope in the statement of work.
That doesn't mean that you're wrong.
So yeah, you know, remember those subledgers in finance and supply chain management are designed to support the detailed operational and transactional reporting. Obviously, like this particular example, like we might have like over made it obvious in the scenario, and sometimes it might be a little less obvious, but we've actually seen it all too often where people have a design where they're literally like designing the subledger in their general ledger, and that defeats the whole purpose of a general ledger and a subledger. You know, and I think if you get into one of these situations and, you know, they say to you projects module is out of scope, then, you know, maybe we need to have a more serious conversation and talk with the steering committee and explain to them why this isn't a good idea. But we shouldn't be just replicating all of that data into the general ledger for the purpose of financial statements. And I've said it before and I'll say it again, right? The general rule, the question that I always try to ask is, do you need to print an income statement by this value? And if the answer is yes, then chances are it should be a financial dimension. If the answer is no, and it's some other weird kind of report that you've never heard of before, and it's not like a standard financial statement, then, you know, maybe reconsider. So, you know, don't use financial dimensions for data that you can get from the subledger. and don't use your financial dimensions to meet those operational reporting requirements.
Yeah, and I would say that, when 5 of your dimensions are fields in a subledger module, that's a good sign that you should be using that module. I'm just,
Yeah.
I
I mean, and like I said, this scenario, this example was like really extreme. Your example may not be that extreme. It might only be one dimension that's, really in the subledger, but.
Or it might be, instead of 18, it might be 10, and the 5 would put you down in the sweet spot of 5 dimensions, which, would make everybody a little happier.
Yeah. You got to think about usability of your solution too. I mean, if you've got that many financial dimensions, I mean, I know accountants really like typing, but I was an accountant once, and even though I have really mad 10 key skills, I'm a big fan of less is more.
No, and it comes down to a lot of errors and things like that, probably too.
Oh.
In addition to, we'll talk more later on about the combinations that would get generated in something like that.
So my next story here, I think you're gonna like this one, Eric. I think this is one you're really passionate about. Contoso Appliances has created a financial dimension for customers. Currently, Contoso Appliances has around 60,000 customers and expects to add around 1,000 to 5,000 additional customers each year. They're hoping for more like the 5,000 each year. And there are requirements to report on the revenue by customer. What do you think we should do here?
Well, I think you should not have that many dimension values, for one. And I think that is a clear sign, right? Since it's the customer account number, that you need to use a customer subledger and implement accounts receivable, basically, because using financial dimensions for that many values, which some of those customers, depending on the sales and stuff, what kind of products they sell, some of those combinations, some of those dimensions for each customer may not get used that often. And we really want to think about having financial dimensions where the values get reused, right? So think customer group, not customer, especially when you have 60,000 customers now, and in 5 years you might have 85,000 or 100,000. Yeah.
Wow, did you do that math in your head?
I did.
Wow.
But it's the same math as the other example, so.
Is this what we might call a degenerate dimension value?
It could be. It could be, yeah, because the number is high, and degenerate relates to reuse more than the number. But this is a lot.
My in-laws buy a new microwave at least once every 4 months.
Then that would be a problem. That would be a problem.
I think they just are not picking out very good microwaves, but I can't imagine that most people are buying appliances all that frequently.
Not normally. And I think that's is similar to the other example here, but the flag here is that the main account for the AR subledger, the customer number, is what AR is built on. So, using subledger reporting to meet the requirements, customer revenue data can be pulled from the sales lines and customer data. You can use the out-of-the-box entities to see if they meet the requirements. And you can create new data entities to normalize the data needed for reporting if there's more detailed reporting than what comes out of the box, but it should still come from the subledger. Same for aggregated entities. And the anti-patterns here are creating financial dimensions with a very large number of values, and more importantly, in this case, I think this is a case of duplicating a subledger value in financial dimensions, which any sort of duplicating is always something to be at least questioned, if not rejected straight up. And then it also gets into degenerate dimensions where the reuse is low, because the reason we worry about reuse or lack of reuse is because creating a dimension is quite expensive, but reusing them is super cheap. So if we're not reusing them, then we're probably putting a extra burden on the system. And in this case, right, we have other ways to resolve or to handle the same requirements.
Yeah, it's all really good points. I've got another story for you. Actually, no, I think you're supposed to tell me a story next.
I am ready.
All right. Well, we're going to switch gears, and the next set of stories are all going to be about account structures and advanced rules. Drum roll.
Contoso Appliances has created an account structure for the profit and loss accounts. In the account structure, there is one row for each main account in the chart of accounts. The cells for each row define the allowed financial dimensions for that main account. And so I'll give you that they probably don't have 10,000 main accounts, but what do you think?
Yeah, no, we definitely don't want to like make one row in the account structure for every single main account. I mean, for two things here, like if you do this, right, every single time you add a new main account, you're going to have to edit the account structure and go through activation to start using that main account. And that maintenance kind of seems like a nightmare to me. What I think you should be doing is grouping the main accounts in number ranges that have similar behavior, right? So when you're adding those rows, you can use, like if you're using the bottom half of the form, you can use the is between and includes, or you could use the begins with, right? And so the format of that is like your number ... number or the number star, if you're going to type it into the cells directly. Right, we would suggest that you try to select multiple main accounts on a single row by using a semicolon. So if they're not in ranges, like if you've got like 6 accounts that all kind of behave the same way, but they're not all right next to each other for whatever reason, then use the semicolon to separate them. And make sure, right, when you're designing that chart, if we would have thought through this, we might have been able to group those main accounts that had similar behavior next to each other, or used a numbering system that made them easier to filter on. But, you know, if we leave room for growth in it and we number our chart well, then, you know, it's a lot easier to maintain. This goes back to that whole idea of don't just take your chart as it is today, because that's what you've always had. Design your chart around what Dynamics 365 Finance is capable of. Some things to note that you can't do here is use more than 7 values on a single cell, or create one row for every main account, right? Like that's the maintenance nightmare. It's and if you're adding lots of main accounts, right, then I'm going to ask the question, like, is this really, should this even be a main account, and should it be a dimension instead as well? Like, but that's a whole nother story. And limiting your configuration to only include actual numbers. So like instead of using a range of account numbers, if you only include those actual main accounts, and that's like the second and third points here kind of, they go hand in hand, but we want to kind of make sure it's really obvious. And using that is filter criteria much, if at all, right? You should try to avoid that if possible. And we did actually, I pulled together kind of some screenshots. I did it wrong, and then I kind of did it right. Should we take a look at that? Or did you have something you wanted to add here, Eric?
No, I think a picture is worth 1,000 words.
Oh, I love that.
And it's not a picture of somebody typing.
No, it's not. It's an actual picture. So on the left-hand side, I set up an account structure where I basically, in the Contoso demo data, I made one row per account. So you can see there's one row in here for every single main account that I have, right? And there's like gaps and spaces in here, and you can see I I've got the different, financial dimensions for business unit, cost center, and department with allowed values in there. I didn't go like way into it, but right, the idea was that in this example, right, I could actually simplify what's currently like 12 lines down into 3 lines in my account structure. So all of these rows here for 401-100 through 401-400 got combined into one row. And you can see that I used 401-100 through 401-999, even though I don't have a 5, 6, 7, 8, 9, like, following that pattern. I used my range and I used a fake account number for 401-999. So if I add another main account later for 401-500, it will automatically fall into the same rule as the rest of these main accounts, these revenue accounts in, that range.
Right. Remembering that the values you use do not have to exist as main accounts.
Mm-hmm. Then I kind of grouped the next 3 rows that have a combination of those 001 through 100, right? So I was using a range of business units. I grouped those all together, doing the same thing where it's all of my 402s basically. And I could have technically well and no, because it's not all of my 402s. On this first one, I probably could have done a begins with 401 and said 401 star. So any main account in the 401 range would behave that way. On this one, because some of my 402s behave one way and some of my 402s behave another way, I definitely had to use a range, but I could have been even more broad on the first row and said 401 star, which would have been any account that begins with 401.
Yes, and I think that, Rachel's done this before, so even her what not to do example has got a good design, which is why it was able to be compressed, and it will perform better compressed because it doesn't have to read as many records. But if the design doesn't compress like this, because you can see the patterns on the left side, if those patterns don't exist, like if each main account literally has different values, then it's going to be a pretty big usability problem, and you'll need to address that before you can sort of do this compressing part.
Yeah, and that's where, right, it might make sense to reorganize or renumber your main accounts to get to some amount of compression. And I get it, like it's not going to be, you're going to have a few exceptions, but if you recall, right, we said manage your exceptions through advanced rules.
And time for our next scenario.
Yeah. Contoso Appliances has created an account structure with business units, cost centers, and departments. There is one row in the account structure to allow all values on all the dimensions. And an advanced rule has been created for each main account to define the dimensions that are allowed for the main account. So Eric, what should we do?
We should use main account ranges for the advanced rules and not have so many main rules. Almost all the rules for account structures also apply to advanced rules. So you definitely do not want to have an advanced rule for each main account. And like I said, if it's the same pattern, if it can't be compressed, then you probably need to take a look at why not. And in fact, one difference is that advanced rules are for exceptions. So in general, there should be less of them, I think, or not tons of them, to use a very general term. So use the account structure for the general rules. And if you're not seeing patterns, sometimes that's what you need to do in the account structure, is remove the exceptions, and then the patterns will come out more, and then you can put those exceptions into advanced rules. When using advanced rules, the same combinations apply to multiple counts. Then you can use a range just like you would on the account structure. The anti-patterns are too many advanced rules in general, especially one advanced rule for each main account. And if you have more advanced rules than your account structure, you may want to take a look at your design. There are exceptions, so there might be technically quote unquote smaller, but That's something to watch for as well, just complexity and managing of complexity.
Yeah, so we put some pictures together again on this one. So in this case, you can see, right, we did one row with many advanced rules. So I said all of my P&L, 400,000 ... star. So like any account. And you can see that there's just the one row in there, and we've got business unit, cost center, and department with the stars. But then I started making advanced rules where I have one advanced rule per main account. And on each one of these, right, we kind of just said, this main account is, something. So on the bottom left here, we've got one rule, and you can see that, and the criteria is not expanded here, but basically, the 401-100 advanced rule is just filtering for 401-100. But instead of making 4 separate, rules here that are all specific to a single main account, I made a new one up here in the upper right-hand corner called Revenue Accounts Grouped. And that's where I put that criteria in and said main account is between and includes 401-000 through 401-999, and put my specific rules down in the advanced rule structure. And when you make that advanced rule structure, even if each individual account has slightly different combinations that are allowed, you can still manage that through one advanced rule structure on one advanced rule that applies to the full range. So hopefully that helps kind of with that example. We do have a couple questions that came in. So
and I read through them, and I'll start, and then
sure.
If you want to take a look at the second one from PD, I'll start it, but I'll have you finish up if you don't mind. The first question was, is it possible to validate the financial dimension allowed values, i.e. the advanced rules, at order line or inventory journal line entry, and thus before posting? I think one of our architect guys said, everything is possible in software, but that's not something that we would recommend. It's not in the standard product, and I don't think we would recommend it as a customization, because the validation of full dimension combinations is, first of all, it's a performance impact of it, and knowing before posting, we're going to do it. Our next Tech Talk series is going to be on posting profiles, and so getting all the dimensions and the main accounts to flow into an actual combination that's going to hit the general ledger is, it takes some doing. And so I think that it would be questionable if you could test it well anyway, and we would not recommend it. The second question is, would you advise how we can control that all main accounts are included in account structures in cases when we use ranges in the account structure? Although Microsoft recommends, again, I think this would be against Microsoft recommendations. I set up each main account on a separate line so I can easily control that each main account is in the account structure. And I think you just have to do what the starting point is. If you use ranges and you have a fixed number of digits in your main account, you can also use a data entity to export it and double check that the ranges cover. But like in our examples here, it's not too bad to tell that you have things covered, 9999, and then the next range is at 100, and when you get them in exported, they'll be sorted well so that you can do that. But I think Rachel probably have some more thoughts on that.
No, I mean, I think you got it, Eric. Right. The key here is use that entity to export them, and you can see it. The other note to make is that by default, it's going to sort by that main account column. So even if you're using ranges, they're going to be sorted, and you should be able to look down the row and see if you have gaps. Now, obviously, if you have like 5 different account structures, that might be a little bit more complicated. And that's where like exporting it using that entity and looking at it from Excel might be more helpful. But, you know, it's certainly like making one row per main account is, you know, not the advised approach.
And
it does make more long-term maintenance, and like you're constantly having to make drafts and reactivate things in order to allow a new main account to be used. So that's where I like, if we go back to the fundamentals and you have a good financial architecture and you've thought through the chart and structured and grouped things well, this should be a lot easier to maintain long term.
And a couple little things that you can do is, one, like a code review, have somebody else review it, and or leave it for a week and come back to it and review it again, because it'll become more clear and you'll be able to see it better. There was also a question about Rachel, about how many account structures, and if it makes sense to have account structure by income statement, balance sheet, so on, production, and so on.
Yeah, so I mean, it's not a one size fits all. Like generally, at a minimum, like from my experience, people's balance sheets are very different from their income statement or their P&L. So at a minimum, you should likely be separating your balance sheet from your P&L. If you also have statistical accounts, I would generally recommend those get separated out because they likely have different rules. When you look a little bit closer at your P&L, it really comes down to like your specific business requirements. If you've got one set of rules for revenue and COGS and a different set of rules for expense accounts, separate them, because it's going to be a lot easier to manage and maintain it if you make one set of one account structure for your revenue and COGS and another one for expense accounts. And think about like if you don't need a particular dimension at all on a large set of main accounts. So like, let's say my revenue and expense accounts are going to use an item group or a brand or something that's like item specific, but I don't have that on my expense accounts. That's a good example of where you'd want to separate all of your revenue and COGS accounts from your expense accounts, because then when you're doing an expense account entry, like with a segmented entry control and a journal entry, it's not even going to prompt you at all for that dimension. It's going to just completely disappear rather than having to tab across it or move on to the next dimension because you don't need it. I think you can, if you really think it through, you can help improve that performance of that account structure. All right. So our next set of scenarios are all around legal entity and the organizational structure. So the first one here, Contoso US was recently acquired by another company based in Europe and needs to start reporting their financials to the new parent company in euros. The company has set up the accounting and reporting currencies as US dollars. What are your thoughts on this, Eric?
I would not call up support and ask them to change the accounting and reporting currency. And the reason for this, so you have to create a new legal entity. It's not possible to change the accounting or reporting currency of a legal entity after transactions exist. And the transactions carry those amounts, and they're implied to be in those currencies. And between exchange rates and all the other stuff, it would be an absolute nightmare to try to change them, so it's not allowed. So you have to shut down the current legal entity and create a new legal entity with the different values, and that's quote unquote shut down, and sort of transfer over to that new legal entity. So you can use the copy company feature to copy configurations. That works well. You can then, as you saw in one of it was part 2 maybe or 3, You can configure a new ledger with anything you want. Make sure that that you've made the right choices. Then you perform a period close in the old company and use journal entries to transfer the balances to the new company and remove access from the old company and add access. So we're actually working on a docs article for a shutdown scenario like this. There's a lot of there's a few different scenarios at least that kind of all end up being the same thing, whether a company closes or they get acquired or they want to change their accounting currency. It's all sort of similar stuff. So I gave the spoiler away. Support will reject anything to change the accounting or reporting currency, and you don't want those numbers anyway because they would be not right. And then don't try to do it at home either. This is not a do-it-yourselfer kind of thing.
You want to tell the next story?
Yes. Contoso Appliances was recently merged with a competitor. The new company needs to report financials according to the new organization's business requirements. This includes a new chart of accounts, new financial dimensions, and a new fiscal calendar. And this sounds like you should just call support, right?
Oh,
Rachel?
definitely not. It's very similar to like the last story, right? You're going to need to close out that legal entity. If you recall correctly from our previous sessions, and we've talked about it multiple times, you can't actually change the chart of accounts. Now, you could certainly put all the main accounts on hold, like suspend them all and make a new list of them in the same legal entity. But that could be messy. And then you're going to have to like reclass all of these things. It's just going to be messy, right? So really the recommendation here is to close out that legal entity. A number of steps that you're going to want to go through, but you might need to divide that period. So if like this acquisition or this merge happened mid-period, you can divide the period if need be to like do a mid-month, period close. And then you can post, delete, or migrate all of your open documents. So if you've got open POs or open sales orders or open production orders or anything like that, you're going to want to migrate those into the new legal entity. You'll want to run any of those required consolidations in your year-end close processes in the old company. Make any of those required adjusting journal entries. You might also need to bring those balances down to 0. Which if you're running your enclose, it'll do it for your P&L automatically. You're going to want to put the periods, your current and your future ones, on hold as appropriate, and suspend your dimensions and main accounts and remove any user security so people can't go into this old legal entity and start making transactions. And then you're going to make that new legal entity, copy in, create your new chart, create your new dimensions, configure the ledger the way it should be for this new company, and create journal entries to transfer those beginning balances. Now, obviously, this is a very simplified list, and to Eric's point, we are working on some detailed docs that will kind of outline all these steps that you need to go through, but this is a good kind of high-level step. Some things to make sure you don't do. Don't permanently close the periods unless there's a legal requirement to do so, because if you find an error or you need to make adjustments, you find whatever it might be a little bit later on, you might have to go back and make more journal entries and adjustments. And if you've permanently closed it, you can't go back and undo that. And the other thing, and I think this goes without saying, but don't go live with a new company without first testing all of your critical business processes, right? You should go through a full UAT process with that new legal entity.
Agreed.
So our next story is again about Contoso Appliances. Forgive us for our lack of creativity here, but Contoso Appliances is a global organization, and they've got legal entities in Mexico, Germany, and France, among other countries. And each of these countries have statutory reporting requirements, and the financials need to be reported in a specific format. Contoso uses a global chart of accounts for all of their internal reporting requirements. How should we meet these statutory reporting requirements, Eric?
We should use consolidation groups and additional consolidation accounts. Create a consolidation company for each statutory reporting requirement or government agency, and create one consolidation account group for the same. Define additional consolidation accounts for each main account mapping for the global chart of accounts, and then run the consolidation process. This is what it was designed to do, and there are other things that people do, but this is what this is what the software was designed for, and this is totally what we recommend. We've seen the anti-patterns. We've seen where we use a translation of the account description, and they put the statutory account in the description for the other company, or using SSRS to do some transformation for the requirements. But I think it, like the last one where we're closing these down, right? You want it to be nice and clean and neat, because that's what auditors want to see.
Yeah. So we did pull together a quick screenshots. We didn't demonstrate this, but this first screenshot that we have here shows the additional consolidation accounts page. This is found in the consolidations module under setup, and you can create as many consolidation account groups as you need, which has to be done before you can open the additional consolidation accounts page. In this screen, you use that new button in the upper left to create the new mappings. If you need two main accounts to map to a single consolidation account, you're simply going to create two entries where the consolidation account and consolidation account columns have the same value. Once you have created your mappings, you can use these values during the online consolidation process by selecting the Use Consolidation Account slider that you see right here. And then in the Select Consolidation Account From field, you're going to select the Consolidation Account Group option. And then in the Consolidation Account Group field, that's where you're going to use the drop-down box and select the consolidation group that you want. In this screenshot, we've selected the German consolidation. And we do have a new feature in 10.0.20 with a KB article that's available for 10.18 and 19 as well, that has performance enhancements for large consolidations. If you haven't already enabled that new feature management feature for the performance improvements to consolidations, we do strongly recommend that you get that turned on.
Yes.
So,
and
yeah, go ahead.
Sorry. Yep. There is a question about can you assign a different consolidation account in each legal entity? And I believe the answer is yes.
Yes, you can. So each one of your consolidation companies can have different consolidation like legal entities and different currencies and so on.
The last question here in the chat is that they're trying to do a consolidation, but they're using the financial reporting consolidation, and the question is about exchange rates for the reporting currency, and all the consolidations that are done in financial reporting rely on their exchange rate to convert, and there's no other option there. The online consolidation does have it was a feature a couple of years ago that if your accounting currency is the right is what you're looking for, it'll transfer those numbers straight across without needing exchange rates, right? If you've got a accounting currency and it's the same as what you want to do your reporting in, it'll just move the value across if the currencies match in the two legal entities, and it can move it from accounting to reporting or vice versa.
Yeah, and we talked about this a little bit in part 4, I believe. You know, when you've got these multiple legal entities and you've got really complex currency requirements, we generally don't recommend that you try to use Financial Reporter as your only tool, your only mechanism for consolidations. You know, the functionality of the consolidations, the online consolidations, was designed for this. And then obviously you can build your consolidation reporting off of those consolidation legal entities. That's our general recommendation. And I don't want to say don't build a consolidated financial statement in Financial Reporter that you can run more real time, but don't try to meet all these complex currency requirements. Financial Reporter was just not designed for that. So that, I think, wraps us up, all of our stories. We do have that same checklist and resources for you that we've been talking about throughout the entire series. We encourage you to download the checklist and use it. Along with those resources, we've got a lot of improved docs articles, and we continue to make improvements. Make sure you take the time to fill out our survey as well. If there's areas that you'd like to see more tech talks or more documentation, tell us about it, and we'll work on trying to make those things happen. And I think we don't have any more questions in the Q&A panel, so I think with that I'm going to hand it back over to Erin to wrap us up today. Thank you everyone for joining us, and hopefully you enjoyed the series.
Excellent. Thank you, Rachel. I did post a link to that survey that Rachel mentioned in the Q&A panel. It is a short survey and only take you a minute to fill out. We really appreciate your feedback. And again, we will always want to hear from you about what you'd like to see in future events. Thank you in advance for your participation in that. As a reminder, the recording of today's session will be available on the Tech Talks Community Dynamics page within 5 business days. I'd like to extend a big thank you to Eric and Rachel, and of course to our audience for joining us today. Have a wonderful rest of your day wherever you may be.